Hi, and welcome to the Educate to Trade podcast with me, Chris Pollock.
And me, Zee.
Hey, Zee. How are you after a glorious weekend for Europe?
Yeah, it's been fun. It's been fun. The Americans lost. Have a go at me.
All right, let's go. Yeah, it was fun though, wasn't it? You guys put on a bit of a fight in the end, but we absolutely battered you over the Friday and Saturday there.
Yeah.
It was looking like we were out of sight by mid-afternoon on Saturday. It was, can't believe it was even a little bit, quite a lot nervy for me last night. I was expecting to sit there, a couple of beers, watch a couple of the first early boys take it home for us, and then it just went red.
No.
Red.
That's how it is with these things, especially Riders Cup. Like, I think a lot of the American folks, my dad especially, everyone was sort of rooting in some way, but it was a shattering sort of season for us when it comes to that.
Yeah, we don't normally win over in the States, so well done to the Europe boys. I've got a little sore head myself this morning, probably not as bad as John Rahm or Tyrrell Hatton, who's got a history of big nights, so the pair of them together. So, hopefully they're all okay this morning. Markets are okay again. We had a bit of a rollover last week, but it's been a couple of weeks since we spoke to you. I know Russell was away gallivanting overseas with the business. So yeah, it's probably worth going back to the Fed, right? We had this, it feels like a lifetime ago, but 10 days ago, a couple of Wednesdays ago, we had that rate cut that was priced in. What do you make of it?
Yeah, it's like for the crypto folks, I wanted more, but I think we got 25 basis points. And has it really rallied the market? Has it really did what it was supposed to do? I don't think so. I think we've sort of consolidated. It sent gold on all-time highs.
Yeah, gold's posted new all-time highs again today. Just opened shortly before this on the COMEX, 20 past 1. It's kind of got a little bit of selling into the open when I last saw it 10 minutes or so ago. But yeah, gold is posting some pretty big numbers. We can take a look at that chart now, show you what's going on with gold. And yeah, we've seen some pretty hefty moves. Oops, what am I looking at? XAUUSD will do the trick. Big pumps to all-time highs in the small hours of this morning. China rumored to be doing a lot more buying overnight, which is what's taken this up a percent or higher than that at its highs. Granted, since the open at 20 past 1, we are off a little bit. But yeah, I wouldn't be surprised to, in the COMEX session, see this high taken out once again. Certainly when I get back to my desk, that's something I'm going to watch with a lot of interest today for gold. If we're just going to scoot back to when we had this rate cut, here we go. I remember this was a hairy first few minutes. We do live zooms through all this for all of our subscribers and stuff. So we were in the first minute this was a bit of a rally in gold, a huge sell-off, and then snaps all the way back, and it ended up being a huge kind of liquidity draw. I managed to get into this short and out of it within 20 seconds or so, because we got a dot plot on this Fed, and that means 7 o'clock is always a really, really interesting time, as we outlined to you last time we were on. And yeah, it didn't disappoint. We had a huge move on this for gold and the S&P actually, and then after the press conference, well, gold kind of flatlined a little bit. It got a little bit less interesting from 8:30. S&Ps were a little bit more exciting. If we look at the SPX, we'll get on the SIBO SPX, you'll see what happened here. Similar action around the Fed itself. 7 o'clock pump up, went down, but we ended up kind of anchoring around this 6,000 level. So last time we were on, we were saying 6,600 for that option expiry was going to be a magnet for price. This was the large gamma level for the monthly and quarterly option expiries. And lo and behold, we did get an extension lower, but by 8 o'clock, this is the bit of the trade I missed. This was arguably the easiest bit. I was quite happy making money on the shorts, but this big rally up would have been even easier to catch. And then we just kind of flip-flopped around this 6,000 level into the close. So yeah, if you put a gun to my head and asked me to pick the closing price before this, I probably would have picked exactly where we ended. And yeah, it got stuck into that 6,600 level, as we were mentioning last time, on a Fed before option expiry. These stock markets can get pinned, and they certainly did on this Fed meeting. But then we went into option expiry. We kind of kept pushed new highs onto the Friday, and then option expiry came and went. And you know me, I like to kind of look for reversals, especially around quarterly option expiries. And I lost money on Monday because this thing just squeezed into the close. We had a 6,700 big gamma exposure, which it got to on the close. But my revenge was sweet because I was short again on Tuesday and I was short again on Wednesday. and a short again in the early hours of Friday. And yeah, we had a big unwind, and I managed to catch not this move down. Actually, it was the initial move lower on Thursday, and then on Friday managed to catch this move as well. Albeit though, we had a nice little close, and it looks like we're gunning for higher. We've kind of retraced. I would have thought, you know, if you're into your fibs, we're probably going to be in towards that kind of 61.8% retracement of this move down. So if it is going to continue, that's interesting level to consider. But what I would say is 6,505 is a big JP Morgan option expression, which expires tomorrow. So it's it's going to be like 170 points from where we opened probably today. I just don't feel like it's got to have enough in it, I don't think, even with this looming government shutdown, which will probably worth bringing on here. But what do you make of this in terms of crypto for looking at Bitcoin post Fed meeting? What do you make of this since the 17th, where we did post a new kind of local high here? But yeah, since then, it's not been great.
Yeah, since we've had sort of the local high, we've sort of been just taking liquidity. We've been sort of shorting it. I've been like my sort of AI agents that I work with have been opening shorts for the whole week, and you can see why, because every time it sort of comes to a level, it sort of takes it out. Comes to a level, takes it out, and I've been in sort of 3 shorts consistently in the month of April. Hopefully the month of October brings a different dialect, and I can say no, I've been sort of taking out liquidity up here, and I've been in longs. But I think currently with the way the sort of sentiment is, crypto is at sort of, you can say, the cusp of 112k. And then the other thing is Bitcoin dominance, right? So for my alt season,
yep, love this.
Right, so this is, I wanted 57% sort of to be taken out as well, but we're still hanging on around like sort of 58-59%. As I said, for the altcoin market, we need this to be below 50%.
Okay.
So I think for now we consolidate, and the same thing with Bitcoin. I think Bitcoin consolidates as well, and I think if we look at equities, I think most of the money is sort of tapping into AI quite a bit. I think if you look at Nvidia, if you look at sort of Google, if you look at sort of the charts, they're all making all-time highs, which is telling you where the money's going, right? Where we're sort of, I think the sort of folks, they're going for Nvidia, AI, and they're going for gold.
Yep.
Sort of the winners for this week. And crypto, unfortunately for now, just stays.
Well, what a year it had though, right? I mean, we had a hell of a start to the year with Trump in town, and it wasn't, near on a year ago, right, since his election win, and that kind of really got things going for crypto. But it's kind of in the doldrums. I'm surprised. Normally there's a really close correlation between crypto and the S&P. But yeah, we've seen all-time highs last week on Monday for the S&P. Yeah, we're a long way from these all-time highs back in August, right? And this week just gone, we had a big bit of downside volatility. So yeah, it's really in the doldrums here at the moment. What do you think we're going to get out of this before the end of the year? I think there's some more life in this, or more downside yet?
The reason we had the pumps in the first place in crypto was because you had the sort of top 10 companies on the NASDAQ and the S&Ps that were sort of holding a bunch of Bitcoin, and they were adding to their Bitcoin. So every sort of dip you had a big company buy into that dip and hold stock there. And what we've seen the last sort of the data we've seen the last 2 months or 3 months, we've seen the opposite. We've seen them sell off their crypto and hold less Bitcoin, more stables, which is telling me right now they think it might go lower. So I predict the way it's going, I think we consolidate, and we might have to take lows out before we make any more highs past 120k.
Yeah, they say that, right? Sometimes markets need to go down to go up. It's almost like a little elastic band, trap some sellers in there, flush out the weak longs out of the market, and then it kind of like levels the playing field to post a decent rally. I'd probably want to see it through some of these lows, and who knows, maybe this kind of round 100,000 figure. It's always an interesting number when you get to these sort of places. Interested to see if that gets traded on a big flush. We'll see what happens there. Dollar index probably worth a look too, right? We were looking at this just before we came on. Maybe we'll switch to a daily chart to get a view of what's been going on this year. But yeah, very clear since Trump came in. Dollar's been going one way, and the rallies are pretty weak, right? We had a decent go at it in May. A better chance in July, but these rallies are just soft, right? We're punching lows. Okay, it's probably a divergent low here, but this is not the sort of momentum for a kind of change in what's been a pretty clear trend on the dollar this year.
Dollar's been sort of going shorter and shorter. Gold and commodities have been going higher and higher. So that kind of gives you sentiment of what the market sees go forward. But I think this week we have a bunch of data, huh, Chris?
So much.
so much data to sort of correlate with, especially the jobs opening, especially things like ISM PMI. I think these things sort of correlate well with the 25 basis points that got cut about 10 days ago. And let's look into the week a little bit and see what's coming up, because I think that's these things.
Yeah, well, this Monday, I mean, it's fairly quiet. We've got a lot of Fed speakers, and we've got Trump on the way. So why is Trump talking here? Well, he's got a lot on his plate this week, right? We're facing down the barrel of a US government shutdown as of basically midnight on Wednesday morning. So effectively, as soon as we take it from Tuesday to Wednesday, that there is, unless a deal is struck between the Democrats and the Republicans, the US government's going to shut down. This has ramifications for markets because, not only does that kind of slightly waver confidence, but those of you who are new, this has happened before. It happens quite a lot. The government shutdown in the US. It's not something, when you read the headlines, you're like, oh my God, government shutdown, that's terrible. It's like, well, yeah, it is again. But, the markets, maybe we're getting a little bit complacent with the fact that this keeps happening. It just shows you the debt story that's going on with Western governments and Western treasuries and stuff, that we keep having to do this. So yeah, maybe I'm personally getting some complacent about it. But I don't think this is necessarily the thing, that the ramification for markets that it could be. You were talking to me about Schumer. He's quite a big Democrat, right? Yeah. Who's in negotiations here. What were they looking for? A bit more on the healthcare side. They're not prepared to push the bet out for him unless they get something in return.
Yeah, with Schumer, you got to make deals, and you got to make them quickly, and he's not been getting his deals. So that's why he's in sort of the Senate, and everyone trying to speak his through, and he was having a real go at sort of the sentiment with where the sort of Republicans see themselves. And he's been in the eye. So when you sort of have a go at Chuck Schumer in public, what happens? A government shutdown. We've seen this happen. I think it happened twice in front of me the last time Trump was in. So I think they're not getting their funding as they want, and that's when you have leaks come out. That's when you hear about things like the government shutdown. So Trump's got to make a deal. Part of the deal.
He loves a deal when it works for him. Right, but yeah, this government shutdown. The biggest thing that I'm interested in is what that means for Friday. Right, we've got non-farm payroll week, so maybe let's start at the back and work forwards. Non-farm payrolls, obviously the biggest day in economic data for the U.S. economy. There's rumors that this might not even come out, because if the government is shut down, we may not get this data.
We may not get the data.
What that then means is the data that we will get. So these ADP figures that we're due on Wednesday. These might be pretty important on Wednesday if we do get that government shutdown. It also means there might be a little bit more focus on the job openings, because if the market's worried that we aren't going to get information about non-farm payrolls, these job openings data that we get tomorrow at 3 UK time, that could actually be more significant than it normally is. I mean, it's been a decent market mover. We had some pretty horrible numbers last time out, which moved markets. Well, there might be an extra emphasis on JOLTS and ADP figures this week compared to normal.
I feel most of the sort of focus can be on the JOLTS. I think that the JOLTS job opening, because compare this to July, and that moves the market, right?
Well, let's have a look at what we got last time. I mean, it wasn't the biggest decline, but I mean, you can see the trend here, right? I mean, we're getting back to kind of pre-pandemic-y levels, right? Which was not a bad economy, to be fair, at the time. So we've just had really pumped like job openings over in the States, which is dwindling back to normal levels. But we have been missing expectations the last couple of times. In fact, it's kind of flip-flopping a little bit. It's probably easier to see in here. If you look back, there's been, last couple weren't good. I mean, there's no clear trend either side of forecasts here, but there is a clear trend of which direction this is going. And if we do get another weak number, 3 in a row, we haven't had 3 in a row, less than forecast for, well, scroll down here, it's going to be a little while. As long as I can scroll back. So 3 surprises to the downside probably do signal something, I would have thought, for this JOLTS figure. So if you do get something sub, 7 million on this, there might be a little bit of a tremor, because I know that the likes of JB Diamond, all these big, bank managers of all the big banking institutions in the US, they don't look at non-farm payroll figures. They look at non-farm payroll 3-month averages.
3 months.
So if you're getting like 3-month averages on the JOLTS and all of them printing lower than forecast, I feel that means that things are less rosy than the forecasters are understanding, and maybe that means more bad news is on the way, and who knows, maybe that's good news for Trump with the rate cuts, but in the short term, we aren't going to get those rate cuts for another month, if we do get them, which I think we will, but we're not going to get them for a while. Then maybe there's a lot more dirty laundry to be thrown out with this data between now and then.
Yeah, Usually we don't talk much about politics, but this is one of those weeks where they're both sort of incognito with each other. You have sort of the Trump sort of issue with government shutdown. You have job openings, because the last time we had the jobs opening, building permits, and there was a few other sentiments I sort of discussed last time. And these things, they show you the strength of an economy. And when you're printing lesser jobs than the quarter before, that means that something's missing. Normally you have more jobs open. That means there's more production going on. There's more. I would hope that AI infrastructure, the stuff that's happening in Waymo in Texas, would sort of see more jobs. But I think that's going to take a bit of time. I think right now there's a bunch of things to solve. I think right now we have to improve from the last figures.
Well, this time last month, I mean, we had the same thing, right? It's the first week of the month. JOLTS, ADP, ISM manufacturing, non-farm payrolls, ISM services. The only one that was better than forecast was the ISM services. Everything else was rubbish compared to the forecast. So, I think if we get something similar, I think that could give these stocks a little shakedown. Obviously, I'm keen to see if we can get that 6,500 level traded, but it needs to be done by tomorrow. That's 170 points lower. I mean, I just can't see it. It would take something, pretty impressive. And even at the moment, like, bad news is almost good news for the stock markets anyway, right? Bad news means rate cuts. Stocks love low rates. So I don't even know what I'm looking for, to be honest, to get it there. I just can't see it getting, it's going to have to be something left field that comes through to get us that sort of momentum, I think. Maybe 6,600 is a realistic sort of support, even for the bears. Maybe if that goes, but I'd have to go today for me to think there's any hope of getting down to that 6,500 by Tuesday. I think that ship probably has sailed. And maybe I'll just have to be happy with how it worked for me last week, and leave this option expiry rollover for the next time. Yeah,
I think so. So we can end the podcast on a few things. So the dollar index short, right?
Looks horrible.
Looks horrible. S&P's made highs, consolidates.
Yeah, I'm more iffy on that one, but it's just off highs. Let's see if it can take them. Probably can. Stock markets do that.
Bitcoin, the bots open shorts for me.
Okay.
And gold, I think, is the rally.
Yeah, gold. I love trading gold this year. It's so fierce. You get some huge daily ranges these days in gold, and when it pops all-time highs, you can get some really snappy reactions. Probably worth looking back at them. I know we've just touched on it, but if we can dig it out again, I'm just curious myself more than anything else to see what the hell is happening out here. Have we turned it around? Not yet. So we are kind of running through lows here. Curious to see if there's a little bit of cumulative delta divergence. Haven't got that on this work computer, but on mine I will see if there is kind of people trying to sell this thing, and then if it's being absorbed into, it might maybe trying to take these longs off on. I think there's a decent chance we do take out that high for the day, so I'm just looking for that opportunity to set up. We'll see where we get to on gold, but I think it's maybe the most interesting thing to trade this week. Unless you get that flush in crypto. To
me, 3,800 was an area where it sort of pulls back to, and then it sort of swings back, right? So 3,800, it did that once here, right, on the 29th here.
Then this is all 5-minute chart, right? This is all today, so.
So all of this today, right? So every time it sort of pulls back from 3,800, it did the same thing, like kind of here, right? So we sort of came to 37,770, 760, and then we sort of really rallied there.
Yeah, I mean, what this is showing though is, just go back to basic analysis, right? You've got higher highs, higher lows, higher highs, higher lows. This is not showing too much in terms of trend reversal setups yet. You'd be pretty aggressive, I would say, to be shorting gold at an all-time high on maybe like a break of a little trend line like this. I think you might make money, but I don't think it's the sort of thing that if you repeat it 100 times would make you money. I'd be much more interested kind of buying new highs. I know Neil in here was always like never short new all-time highs. It's just kind of a rule of trading for him. I kind of concur. You don't want to be it's nice to be the hero, but it's costly because you might only be the hero 10 out of 100 times and all of a sudden you're down.
Yeah. So I think 3,800 is the place that, have an alert there, but not to look to short directly, like wait for more sort of ranges. I think we go back. I think this thing goes back up and makes new highs. Yeah,
let's see if we can just keep posting new lower lows, higher lows, maybe even sweep some of these. Let's see. But I think gold's going to be pretty volatile for the rest of the day. So often a big impetus at 230 on gold as well as the stock markets. So even though the COMEX gold has been open for a little bit, 230 will be fun for gold as well, I'm sure. Watch that this week and see if this government can stay in business.
Yeah, if they can sort of keep away from the shutdown, then the other sort of indicators will sort of have a domino effect. I see this thing when you don't have a government shutdown, it shows strength, and then sort of you have a good jobs opening, and then ISM PMI comes out, and then the other ones, and then we go in a little rally.
Yeah.
But then it could go the opposite way as well if we have a shutdown.
Yeah, well, this is it. It's big work for Donald Trump. But let's be clear, there was only one Donald winning this weekend, and that was Luke. We'll sign off there, shall we? Thanks for joining us. I've been Chris Pollock.
And me, Zee.
See you next time.
Thank you.